Yo, yo, yo. Mic check, mic check. Okay. We are live. We are live. So my name is Lou. I go by Next Straight Lou. I am one half of the Futures Connect. My brother Crypto is the other half. He'll be joining in a few. But yeah, I wanted to take the time to go live to stream some dojo work. So I know there have been times where we've mentioned the term or phrase dojo work. So I'll give a little bit of an explanation right now. So dojo work is essentially just revisiting a chart of any given day or week, and I'll say just measuring out um, possible trades that I would have been taken. So I'm gonna be doing that for the past week. So Auntie, I see you. Yeah, so I'm gonna be just measuring out some potential entries and potential trades that I would have been taking had a person just been following the strategy 100%, which I did this week. I had a good week this week. One of my days was the red day, but it's a law of large numbers, and you can be green every day. I did have some technical difficulties, but got right back on it for the next day, which was Friday, and was green. So the full week was green. But yeah, let's go through on the chart and see how the dojo looks. And I want to mention one more thing too when it comes to dojo work. A lot of times what will happen is you'll be given a strategy, and a trader might have, one or two or three losses, or have a little bit of fear going into the trades. At the end of the day, when it comes to trading, you need to be confident in your strategy. So doing dojo work will definitely help you get some confidence, build your confidence to let you know that you should take all your trades. If you have if you have a trade thesis and your signal presents itself, take the trade. Don't have fear. You got to understand, in trading, you will have wins, you will have losses. You cannot fear the losses. You cannot fear the losses. So let's get right into it. What's up, Lonzo? What's going on? Appreciate y'all jumping on the live cast to see me do this. Yeah, and as we've said in the group, we're gonna start doing more live. We're gonna start doing more live streaming just to have more content, as well as help out with just education to help traders, because trading is difficult. It's difficult in terms of psychology. We also make it difficult for ourselves as well. If all we need to do is take the trade, follow your strategy. The strategy works. A lot of times we'll take some losses and want to change the strategy, or go to another strategy, or try to alter something or fix something. Just take the trade. That's all you got to do. Take the trade. Um, I see my guy Crip is in the building. Think he's getting ready to come in, but all right, let's go. So again, we're going to be doing dojo work for this last week of July. So that's going to be Monday, July 24th through Friday, July 28th. I'm essentially going to be measuring out the potential traders that would and let's go. Let's get right into it. What's going on, Crip? You want to say a few words?
What's going on? What's going on, brother? Not too much. I want I'm just tapping in, make sure support you.
Appreciate
And
it.
sorry, I lost words for a second. But my name is Crypto. They call me Crypto, Meta Crypto. I am the other half of the Futures Connect.
Yes,
So
sir.
yeah, I'm just here for support, y'all. So go ahead, do your thing, bro. I'm here.
All right, cool. Let's get it. So what I'm going to be doing, again, measuring out the specific trades that are on thesis, and then documenting the results. So this is just an exercise to build confidence in the strategy. So I know there are times when people ask, one of them, oh, a lot of us, we have the same tools, but we might have different results. Why is that? A lot of times there's fear. There's a lot of psychology. So let's get right into it. So we're gonna start with July 24th. So let's go back to the chart. Let's bring this back to the 24th. My trading window with the Dojo work I've seen is between 9 and 5. So on any of my trading days, the first trade for Dojo is going to be taken anytime after 9 a.m. and that's Eastern Standard Time. So let's bring it back to the 24th. Let's see, this day is the 21st, so a little bit past. Let's see here. What's this? The 24th. Okay. So as we know, the futures market for any given day, we have July 24th, the 24th day for the futures market, or the futures market for July 24th starts 6 o'clock on the 23rd. But again, I'm starting at 9 a.m. So let's go to 9 a.m. Let's see, the first trade is go time. It's a go time karma candle trade. So here we go. Start measuring. So for my thesis for go time karmas, I'm taking 8 ticks. There we go. And I know, don't laugh. Check. It's a go time karma. That's a check. So
explain to them what these tools we're using is to measure.
Oh yeah, for sure. So we have through our mentorship, we've been provided with some tools to use for our trading, for our trade thesis. So we use Renko bars. I know a lot of other people, they use, they could be Hakanashi or 5-minute candles, 10-minute candles. For Renko, it's money based. We're trading with the money. So we want to see the money movement. So that's why we use Renko bars. As far as these trend tools, many different vendors have different tools, but we are using some tools that are from, I'm blanking on the vendor. I believe it might be Ninjacators, or it could be Ninja. But in any event, we have these trend tools, and you'll see that as a Renko bar crosses one of the trend lines, you'll see that the trend changes. But the first trade we're taking now is, again, it's a go time karma trend trade. Go time is another tool that we have through Ninjacators, and that's a tool that measures RSI, stochastics, as well as RSI, stochastics, as well as the MFI, which is our money flow index. Appreciate that, Crip. And when all three match up, that's when we are going to be taking these karma entry trades. For the trend trades, we're taking all trend trades, no discretion. Naturally, if you are trading in the market, what you're gonna be using is your discretion. There are areas like golden ratios, which are 61.8 or 38.2, 11.4, high today, low today, yesterday's open or yesterday's closing price. Those will be some areas where you may or may not take trades, but again, for this exercise, no discretion. So again, first trade is at 9:20. So documenting all trades. 24. That is no time. 9:24. And also, I'm going to be doing all these trades in the E-mini as well. So that's a short trade. It's one contract. Let's go back to the entry price is 45.74. Okay. 74. Also, we'll be measuring the risk because we are good risk managers. So we always want to know how much we are risking per trade. On this trade, we will be risking 11 ticks. So, and I'm going to be going back and forth between the Google Sheet as well as the chart. So again, I said 8 ticks. So just a quick math. If we are in a short entry in the ES 4574, well, what's 8 ticks less than that? Well, let's do this here. Minus 2. That gets me to a target of 45.72. That's $100. Also, a lot of traders, when they go into the market, they may or may not have a game plan. For us, I think it's best to always have a daily goal. And depending on where you are in your trading career, you can have a small daily goal, you can have a larger daily goal, and it also depends on how many accounts you're trading. It depends on size of your accounts, your drawdown, many different things like that. Um, so if your account size is not large enough, I would recommend going into the micro, unless you have enough discretion and you have enough mental capital to withstand any losses that you may take in your strategy. Again, no, there aren't many strategies that have 100% win rate. And I mean, we know of a trader, our mentor, who at times has 100% win rate, but that's an anomaly. That's not the norm. Most trading strategies, they just have losses that come with it. So you got to take those losses in order to be a good trader if it's within your strategy, as long as you have it. So first trade.
Hey, yo, real quick.
Yes, sir.
Not to cut you off, but we got a comment. We got a comment in the chat that's very important. She
Oh,
said, "Did she miss your disclaimer?" I think that's definitely a very important thing that we got to do before we um get into any
yeah.
of this.
No, that's true. That's true. So what I'll
Shout
say
out
is,
to the chat.
yeah, I'll say appreciate that, Auntie. What I'll say is, if you're on YouTube looking at the video, we do have the disclaimer in the description, but I think it is probably a good practice to mention the disclaimer as well. So I will gladly do that right now. I'm just pulling it up. You gotta always have that accountability as well. Because again, this is entertainment only, or education only. This is
I
not
got you, bro.
take the trade that if you don't know the strategy. So go ahead, bro.
So none of the content published by the Futures Connect constitutes a recommendation that any particular security portfolio of securities transaction or investment strategy is suitable for any specific person. None of the information providers or their affiliates will advise you personally concerning the nature, potential, value, or suitability of any particular security, portfolio of securities, transaction, investment strategy, or other matter. Please note that the Futures Connect is not a financial advisory group, nor do we claim to be. The Futures Connect does not provide investment or financial advice in any form and is not a broker. You understand and acknowledge that there is a degree of risk involved in trading securities and trading options. You acknowledge and you agree that you and not Futures Connect are solely responsible for your own investments and research. Do not trade with money that you cannot afford to lose. Where we at? Please do your own research, your own due diligence
Please.
before investing in any securities mentioned, and you are urged to confirm that data with a specific issuing company. The Futures Connect will not be liable to any person or entity for the quality, accuracy, completeness, or reliability of any investment or informational source. We encourage visitors to invest carefully and read the investor information available on the website of the Securities and Exchange Commission. That can be found at www.sec.gov and or the National Association of Securities Dealers, which is known as the NASD, and that is at www.nasd.com. You are responsible for your own investment and decisions, which you should obtain from a professional prior to taking or making any trade or investment of the type discussed or posted on this channel. By using or accessing this channel, you agree that you have read and understood this policy and acknowledge and consent to the learning, collection, and use and sharing of information described in this policy. Also, remember that this is for entertainment purposes only.
Appreciate that, Crip. And for anybody that wants to see the disclaimer, it is in the description of the video as well. So you can go down and click view more and you can see that as well. Okay.
Sir.
Thank you. So we have our first trade that was taken. That was, again, the Go Time Karma. We're going for 8 ticks on the ES. The way I was able to come up with 8 ticks is by just previous Dojo work that I've done. I've seen that 8 ticks is a target that is hit a very high percentage number of times. So that's what I've gone with for Go Time Karmas. And then for the trend trades, I'm going for 20 ticks as well on the ES. So for the ES, 20 ticks, that's a $250 winner. So you can see at 9:30 at the market open, that is a uptrend trade, entry at 45.7650. But 724 here. So we got the trade at 9:30. Market looked very bullish. So what we're gonna do, take that trade, 45.7650. 45.7650. We know on our trend trades, the number of ticks of risk per contract is 31. Going for 20 tick targets or 5 points. So if our entry is 45.7650, we're gonna just add 5 points to it. That's a winner. That's $250. Within the first 30 minutes of the trading session, you were up $342. That's $342 in a half hour. I'm not sure where that's happening for people outside of trading. We have an edge, people. So we just gotta get our psychology right and take the trades. So let's continue. All right. At 9:39, we have a Go Time Karma and a trend. Entry 45.81. 13 ticks on the stop if we need to take it. 13 ticks on the stop. Yes. Long there at one contract. And I will be whizzing through this very fast. 45.81. $9.39. And again, I'm going for 8 ticks. It was clearly visible. So 8 ticks, 2 points. Another check. That's $438. Yeah, so again for this is the ES. I know crypto likes to trade the NASDAQ futures, which is NQ. I like to trade the ES, and that's just my preference. The chart does show MES, but I replicate into a lot of my follower accounts. And in my follower accounts, I trade the E-mini. I have some accounts where I trade MES. So, but for now, it is on an MES chart. But there are two different markets, MES and ES, but the prices are relatively the same. You'll see that they move the same range, the same speed, but they do follow one another. So yeah, after 3 trades, after 40 minutes in the morning, up 438. Again, no discretion. We're taking all trades right now just to show the strategy. Okay. We see a go time. We have another entry, 9:45. I believe on Monday this was some news. I believe PMI. So if you take this trade here, entry. And again, this is no discretion. We're going entry 4582. Entry 4582. ES long run contract. Go time 9:45 on the entry. How many ticks of risk? 15. And again, we are good risk managers. So the cost so far of, let me add this last target. We see we do eventually get the target from 4582. Do we get to 4584? Let's see on the right. We do. That's the target. And guess what? We enter the trade at 9:45. It takes 3 seconds to hit the target. That's 3 seconds to get $100. 3 seconds to get $100. Or say we get some slippage on the trade. Let's do that. Say we get some slippage. Say the entry was that much higher. Guess what? 45.82. Let's say the entry was 83. Do we get to 85? Yes, we do.
Explain slippage.
Slippage is when you're looking to enter a market at a certain price and you don't get filled at that price. You get filled at it could be a more favorable price. It can be not so favorable price. But slippage is just when you are not entered into a trade at the price you thought you would be getting it. So because the market is fluid and there are times where on a chart it may look like there was activity or volume at a price, it doesn't always have to be the case. We use wrinkle bars, so there's smoothing of the activity. So just because the top of this wrinkle bar is at 45.82 doesn't mean that as the wrinkle bars move, it doesn't mean that there was actually activity at 45.82.25. It doesn't mean that between these wrinkle bars that there's activity. Wrinkle bars it's kind of a smoothing mechanism to show kind of fluidity of the market. And again, it's all money movement. That's why we use wrinkle bars. You can use a time-based chart, but a lot of times what will happen is if there isn't movement during so for any candles that you use, if you're on time base, if it's a 1 minute candle, or if it's a 5 minute candle, or if it's a 10-minute candle, if there isn't any activity within that bar, within that 10 minutes, you might just see a line. Whereas, or you might just see a line, but with the money movement, you'll actually see the money being moved within that time. So it's just better for the eyes that way, so you can see what's actually happening. So 45.82 or 45.83, it doesn't really matter. From any of these entries, your stop will be down here. Your stop doesn't get hit 83 to 85, 8 ticks, that's a winner. Or as I like to say, that's a check. So copy that here. $534. If that's your goal for the day, you'd be done. Daily goal, it's a 5% goal. We're going to skip the goal for now. We're just going to continue showing the results of the trades. So within 45 minutes, that's $500. Let's see what the next trade gives us. Okay. So as you can see at this time, the buy button was told to turn on. If you had your price action button on, it doesn't take a trade. Why? Because you don't get a go time karma there. Instead, you get a trend trade. And again, I don't know what happens next, but we're gonna measure. See from the entry, your stops up here, 32 ticks, 45.78.50 at 9:46. 45.78.50. Okay, here. 45.78.50. We know on the stop, 31 to 32 ticks. And that is a ES short. 9.36. Let's see what happens. I don't know. We're taking some heat. All right. And also noting, while trading, As the market starts to move in your favor, we're seeing the trend line also. The trend line is also moving down with the market, meaning if the trade ended up going back against you and the trend switched, your loss would not be as much as when you initially got in the trade, because now your risk is reduced as the market moves in your favor. What you would do with your stop is you would attach it above this indicator. So you will see the market moving towards your target, but your stop is tightening up towards the entry price. So entry 45.78. What we need is 20 ticks. We need 45.73.50. Do we get it? Yes, we do. All right. So we're going short 45.78.50. We know we need 5 points less. So this number minus 5. That's also a check. That's $780 after commission. We have an edge, people. Okay. What's that? That's a go time karma. All right. Another trade. We're gonna measure. Am I leaving anything out? Am I leaving anything out, crypto? Layman?
No, you good.
All right, Layman. All right, let's go. So entry time.
I mean, it was a couple other price action checks up in there. Oh,
They were.
yeah.
Well, I'll explain that in a second as well.
Yeah.
75. 75. 72. So okay. So crypto mentioned a good point. And I'm just measuring out the risk. 19 ticks on the risk. 19 ticks. So during this downtrend, there were multiple karma candles that were not taken, right? Let me go ahead and I'm gonna keep it in draw mode. So karma candles, I guess we can see it. One here.
Also, while he doing that, y'all, just keep in mind, this is a video for the dojo work. A lot of the stuff that we are talking about will be explained in future videos. So just hit the like button, subscribe, hit the notification bell so you can be alerted when we do drop these new videos. If you are looking to get educated and entertained in the futures market.
That's a fact.
Let's go.
Let's get it. So entry is at 45.72.75. That's what we have here. What do we need? We need 45.70.75. Let's see if we get it. Oh, it looks like we almost get it. Let me see. Let's drop this down. Let's make this even more realistic. Let's say we got a bad fill. Let's say we got some slippage. That's where slippage will come in. Let's say we got some slippage, right? Let's zoom it in here. The bottom of this candle is 75. Let's say we got entered at 50, right? Now, what do we need? I'm going to do one more measurement. So from here, we need 8 ticks. 8 ticks is at 45.70.75. What is the low of this candle? It looks like we don't get it. The low of this candle is 45.71. So we would still be in this trade. Our stop is up here. Our stop is at 45.77.25, right? Let's see. Actually, it would be, if this indicator is at 77, we'd be 2 ticks above for the stop. So let's call it 77.50. Let's say 19 ticks on the stop. 19 ticks on the stop. It's dancing. It's coming up near. It's coming up there. It's coming up near that stop. What we gonna do? We gonna panic? Nah, because we've already predefined the risk. We know what happens when you get into a trade. You got to be cool if it's a loss. If it's a loss, it's a loss. Next trade. But again, we have an edge. We're gonna win more times than not. But if we lose, we lose. And it's not even really a loss, it's a learner. But let's see what happens. Let's let it play out. We need on the target, we need 45.70, not 75. Look what happens. Oh, we get it. That's a check. That's a check. We have to, and trades don't go straight to target. You enter the trade, you put your stop where it needs to be, you put your target where it needs to be, based on your edge, based on your dojo, based on your strategy. We waited 7 minutes. We waited almost 9-10 minutes in this trade. 10 minutes for $100. Give me that. It's a check. Why is it being held up at this area? 61.8 golden ratio. We know that. We've heard that so many times. I don't even know how many times we've heard golden ratio. Like, I don't know. Again, we can see this is if the time is right now. Will the market run back up through this level and bounce off golden ratio? Who knows? We'll see. We'll see with the dojo. But guess what? Let's enter this trade result. This was the entry, 45.72.50. We know we needed 8 ticks. We got it. It's also a check, $875 in the first hour of the market. Okay, what happens? Oh, wow. That's crazy. Double bottom off the golden ratio of the day, and the trend changes. What do you know? Golden ratio support. How many times have we heard it? And as Mentor would say, somebody shorted down here. How do we know? Because there's an the price got filled. Someone shorted 45.70.25. Someone did that. Moving on. Entry price on the trend, 10.12, 45.77.50. 45.77.50. We know the stops on trend trades is 31 ticks. We're going to pay to find out. BS. Uptrend, one contract. What's the time on that? 10:11. See what happens. That's a trend trade.
When we finish with that, I want to go back and explain something for the people.
Sure. After I do the trend trade?
Oh, you back now. So
yep, go ahead, bro.
A lot of times what people got to understand when you're in this game is that there's people that's playing on your psychology, right? A lot of times that play come with retesting. So you may see it make a move from a certain area, then it may try to draw in certain kind of other traders. But then it goes back down to that level, retested, and then go back in the direction that it was going in. Like, for example, this right here, it came down to the 61.8, went up a little bit, came back down and tested it, and it shot up. So just keep that in mind, because these are the kind of things that you have to know in the moment when you're, when we playing this game, because at the end of the day, it's really all about a game. And once you learn how to play the game, it can be very lucrative for you.
That's a fact. Appreciate you explaining that, bro. So yeah, that golden ratio, it's a serious thing. It's a thing. Definitely be aware of the golden ratio. So as we were saying, there's now an uptrend trade at 10.12. Entry price 45.77.50. So let's see. 10.12. And also this dojo Google sheet will be available for viewing as well, so that other people can go back and match and see how they fared during the week as well against these trades. So entry 45.77. We know we need 5 points. We need 82.50. Let's see. Do we get it? Do we get it? Of course we do. We have an edge. Equals this plus 5 points. Man, in an hour and 12 minutes, following your plan, you have taken 7 trades, $1,122. Just following the plan.
Following the plan.
Just following the plan.
Thank you, Auntie. Hey, look, check this out. While y'all in the chat, man, go ahead and hit that like button. If y'all on YouTube, go ahead and hit that like button and share it with somebody.
Please,
real quick.
Please do. It really is such a psychological game where we make it so much more difficult for ourselves than it already is. It's already difficult trading. We don't need to make it even more difficult for ourselves. Just follow our plan. You know, that's the thing. We have tools, we have algorithms that match up with the indicators. If this thing says uptrend, we have algorithms that will take the trend, they will take the trade for us. Just turn your button on and take the trade. The stop will be placed where it needs to be. The target will be placed where it needs to be. Just take the trade. There's nothing else. There is nothing else that you need to do. And if one person were to be, as Lonzo mentioned, this chart is micros. Yes, it is. Okay. What if you were taking micros? You'd be in, it's MES, right? You would be in 5 contracts, or how many contracts your risk tolerance says you should do. If you did that, that's $539 in an hour.
Beautiful.
That is minimum wage in this country is, I don't even know what it was, like $8. There's some people that have, was it $8, $9, $10? I don't even know.
It went back to 98.
No, I think the federal minimum wage is very low, but I know state minimum wages are higher than the federal. I know federal $8 or some shit, and then I know Massachusetts minimum wage is like $15 or $16 or something crazy like that. So this is $539 an hour in micros, no losses.
That might, hey, look, that's damn near a surgeon's hourly wage.
That's what I'm saying. $539 a day, 250 trading days a year. That's $135,000 per account. You got yourself 20 accounts. That's 2.7. Even if you did half this, say you only traded 2 micros. If you traded 2 micros and followed your plan, and say it was $215 a day, $215 a day, 250 trading days, that's 53 for the year. If you had 20 accounts, that's 1.1. You just gotta be disciplined. But again, not every day is like this. Not every day is where you take your first 7 trades are all winners. This is not every day. But this is just what data says. But okay, moving on. Let's get right back to what we're doing. All right.
So, also, keep in mind too, though.
Yep.
Like we've put in time and work on this for us to be able to come to y'all and show these videos and show our knowledge and show what we've learned. It definitely comes with time and it definitely comes with work. You can't go halfway and expect full expect the full results. It's not gonna happen. Like you literally have to be obsessed. Literally got to be obsessed with this with these markets.
Mm-hmm.
If you think about it like this, and don't get me wrong, I'm not knocking a traditional 9 to 5, but psychologically we are forced to be obsessed for somebody else's dream. We are forced to be obsessed because we get paid to. We get paid to be obsessed with somebody's job for 8, 10 hours, 12 hours a day. But we don't think about it like that, you know? So if we can just take the same mentality that we have for an employer and apply it to a skill like this, your results is going to be 10 times better.
Mm-hmm.
That's with this, that's with a business. If you're writing a book, if you're doing anything that is going to be something for yourself, you you have to be obsessed with this 100%. It's going to be people around you that's not going to understand what you're doing. It's going to be people around you it's just they have a traditional mindset and it's okay, but don't let it affect you because if you do, it definitely will. Speaking from experience.
Yes, sir. Yes, sir. That's a fact. It's definitely a good point, bro. So moving on to the next trade. So we have taken the trend trade at 10-12. It was a winner. Now we're looking for the next go time karma. So every time we see, if we are in an uptrend, we see a blue shaded region on the chart. That's when we know to turn our price action buttons on. Let's see, the time of this trade would be 10:34. Measure the risk. 2 ticks under the trend line. So we got 45, 80, 70, 5. We got 45, 80, 35. 19 ticks on the risk. And it's always good to measure your risk. You need to know how much each trade is going to cost. So we know the cost of, I'll go over the cost of our winners so far. So it's another situation where go time karma is an entry. Where does our target need to be? Our target is 8 ticks away. We get it. 45, 80, 75 to 45, 82, 75. Okay. So $1,200 within an hour and a half. Okay. So I'm gonna take a break for a second just to explain something. So as I'm going through measuring these trades, measuring these go time karmas and these trend trades, I'm noting the time, the instrument, the direction, the position size, entry, takes a risk, and exit. In column Q, what we see is this number is it is totaling the total amount of cash at risk. So the cost of this $1,200 was $2,100. This is how much you would have lost if you lost every single trade. Because we have an edge in the market, I am of the opinion, and it is highly probable, that I will not lose 7 straight trades in a row. It is highly probable. I'm not
Because
saying
what?
I'm not saying that it would never happen, but what I'm saying is this is the amount of cash at risk, and that is because we have an edge in the market. That is just data. That's just what data says. When going back, looking at Dojo work and looking at all these trades and possible trades that could have been taken at any of the times in the live market, I'm not losing 7 straight trades. There's a reason why these signals are given for these trades. It's because data says to do so. Data says to take the trades, put your stop where it needs to be, and take these targets. So we are good risk managers. We have accounts that have enough drawdown to withstand any number of losses that happen that's within your risk. So just follow your plan. So we have, again, go time trade 10:33 a.m. It's a long entry, 8 ticks. It's a check. Let's go back to the chart. Next go time karma candle. I'll measure that out as well. Same thing. 2 ticks underneath. Entry 4580.25. Risk on that, 17 ticks. Let's see if we hit target. What happens? We know if we're in that 80.25, we need 82.25. Do we get it? Yes, we do. That's a check. Simple math. Straight. That's 9 trades, 9 for 9. That's 100%. 1,300 with a cost of 2,300. Let's see. Do we get another signal? We do. Here's a trade that didn't go straight to target. You had to tolerate a little bit of heat. Guess what? Your stop. So your entry is at 82.50. See what the risk is. The risk was 22 ticks. Time of this trade, 11:02. This is go time. Let's see what happens. Oh, here's the entry. I think we're in this trade, you're up 2 ticks. Your max favorable at this time was 2 ticks. It begins to go down. Then it bounces. It's in your favor. It's going against you again.
How much? At what point? How much was you down in this trade?
At this point in the trade, we were down 14 ticks. That's $175. In this trade, you were down $175. If you had lost this trade, this would have been a $275 loss. Would you be okay with a $275 loss, given the fact that you're up $1,300? You'd still be up over $1,000. That's just part of the game. That's just what it costs. That's the cost to be the boss. Why 22 ticks on this? Well, we're measuring from entry to the trend line. There are many other strategies to use or many other methods to do within this strategy, within Trilogy. You can measure from your entry to the trailing stop. You can take this loss and then take this trade on another go time. Do that too. In my dojo work and in my live trading experience, what I've seen is the trend really is your friend. And if you really want to be within the trend, you sometimes have to pay the cost to be the boss. And that's just what I've seen. I know other traders who will enter here, put their stop here, and guess what? They might go heavier on the contracts just because if they were to get stopped out here, it would still be within the risk. Then if they got in this trade, they measure from here to here, they can even add a little bit more than one contract on this entry. And guess what? They can recover for it. They can make up for that loss previously. They can make up for it on this trade. We have seen that happen as well. So, yeah. And why 2 ticks below the trend line? Because there are times where, well, the algo is set up that way. And then the second, there are times where you will see the market with the wrinkles. They might wick through the trend line, but the bar doesn't actually close below the trend line. In order for the trend to change, in order for the trend to actually change, the wrinkle bar needs to have closed below the trend line. That's the conditions that need to be met in order for the trend to change. So hopefully I can find some examples of that happening during the dojo work, and I'll definitely point it out to you just so you can see it. But yeah, so the entry here is at 45.8250. Let's see if I got that down. 45.8250, 22 ticks on the stop. We need 84.50. Do we get it? We get more than that. So
also to add to that, Lonzo, so because and it's starting to make sense as to why the question I had earlier too. But
Mm-hmm.
because what you want, a 3-1?
This is the 3-1 break.
So if you got the trend line at, let's just say, if you got the trend line, that means that if price gets to exactly where the trend line is at, the next threshold is one tick to the bottom, even though it might be on the trend line. The next threshold of the Renko bar is one tick. That's why we use Ninja Renko, because it gives us that threshold between each bar. Each on the chart that he has right now is one tick. So that next tick below the trend line is going to start a new trend, but it has to close to start that new trend. So that's why he has it down there.
Yes, sir. So let's see. Okay.
Do me a favor, Lou.
Mm-hmm.
Click on that bar that starts the new trend. So the low of that bar is 45.59. No. I'm sorry. The
The
low of that
lowest bar
bar is
45.
45.79.50.
Yep.
And where's the trend at?
So I know what you're getting at. So this trend line here with this blue line for the trend line is 45.79.75. This Ninja Renko bar, the low of this candle is 45.79.50. So
Right.
yep.
So if he had a threshold of 2, then it'll be different because it'll take a different switch over. And we'll get more into that in the upcoming video. So make sure you just go ahead and hit the like button, subscribe, and hit the notification bell so you can get notified when we drop those videos.
Yes, sir. Okay. Now we have we have some trades where we're about to take a loss. So let's see. Entry on this one. This is 11:35. Your stop would be, so here's the trend line. It'll be 2 ticks below 16. So 45.83.25. So 45.83.75.
So let me ask you,
25.
wouldn't your stop be at the bottom of that bar that created a new trend line?
Yep.
You see?
Yeah. So because for me, I have
And that's what Auntie asked too.
yeah. So I'll explain that right now as well. So I know there are multiple people that have we all have the same algo, but we have it set up differently. So for me, if I'm in a price action trade and the next possible trade would be the opposite direction trend, because I'm in the price action trade, but I have another algo set for the trend trade would be taken. What you would see happen is if I'm not out of the price action trade, but the trend trade gets entered, what you'll see is I go into the trend trade, then I lose the price action trade. If that makes sense. I know other people, they have their algo set to be on both, where they have one button only. They take a trend trade. The only way for them to ever get a price action trade is if they have taken a winner or a loss on the trend trade. For me, I'm in the price action trade. I have another algo for the trend, but I'll get into the situation that you guys are talking about, where if you're in a trend trade and you want to go into the opposite direction trend trade, yes, you would have to be out of the trend trade with a loser or a winner before you get into the opposite direction trend trade. I'll go over that as well.
So okay, so because you measuring from even with your trend entries, you measuring from the trend and you putting it 2 ticks below the trend line.
That's how
So
it's set up. Yep.
right. So go back to the chart real quick.
Hold on 1 second. Yep.
Okay, so whether you in so your wouldn't your stop be at the bottom of the bar that created the trend? Because if you zoom in on it, you like a tick below that bar.
So the algo, when you take the trade, the algo puts the stop 2 ticks below the trend line. That's how the algo is set. 95% of the time, you will be stopped out before the trend trade even changes, before the trend changes. You will see times, because it's Renko bars, you will see times where if you're in one trend trade and you want to get in the other trend trade, if the trend changes and you're still in that trade, you won't get put into the opposite direction trend. 95% of the time, you will get stopped out, then put in to that trade. But you will see times, and again, that's because we're dealing with Renko. It's not, the market is, Renko makes the market look very fluid, but it doesn't always mean that there is activity on every single tick. You will see that. So hopefully that answers your question. If you are 2 ticks below, because again, what will happen is, if this could have happened, say the trend didn't change, right? Say the trend did not change. Say I put my stop 2 ticks below the trend line. What could have happened is the market could have wicked through the trend line. This could have been the lowest bar, but this bar never actually closed. It could have gone right back up, and I would still be in the trade, as opposed to taking a loss and the trend doesn't change and now it's a winner. I've seen people where they put their stop, they'll see the trend, they'll see the stop on their trade 2 ticks below the trend line. They'll move the stop to the trend line. Market will come down, stop them out, run back in their favor. Now they're wondering, wait, why did I get stopped out? Well, you got stopped out because the market took you out. The market came, wicked you out, the trend never changed, and went back in your favor. How do you avoid this? Put your stop below the trend line and deal with it if sometimes the market doesn't take the next trade. If that is the case, if the trend changes and you don't get in that trade, you get stopped out, you can always mark it in. You can always mark it in, and the market doesn't move so fast that you can't measure out the risk in the stop and put the stop and everything where it needs to be. That's all. You can always do that too. That is always, especially if the market is still if it's still in the entry area that it would have taken the algo trade, you can always just mark it in, put your stop where it needs to be. You might even get a more favorable price. This trend we see is a loser, but had you, say that happened where, say you had one button, you had a price action long, you took the stop, you weren't out the trade before the trend changed. Now it's in a downtrend. The market's kind of moving price action back up. So if you were to take a short, it's a more favorable price. You could do that. You could mark it in around here. Now your trend entry isn't at where the trend changes. Now your entry is even higher in the short. Now you put a stop up here. You have much smaller risk. And if you want to, you can gain more on the trend trade, where if you measure from where the entry would have been, you put your stop here. If the target for the trend trade is down here, but now your entry is here, guess what? Now you have a better risk to reward ratio. If your entry's up here, now your stop is, now you only 18 ticks from the stop, but guess what? From the entry, now you go for 33 ticks right now. 18 ticks on the stop, 33 ticks on the target. But that's just if you want to get frisky with it. So that's also another option as well. But that's a good question. That's definitely a good question because I even had some issues with that earlier this week where I was in a short trend and then I was in a price action in the short, got stopped out of both. The trend changed and I was not able to capitalize on that winner. Eventually ended that day green because I just continued trading, didn't get flustered. But I can see how that can be an issue for someone, especially if their mental capital isn't all the way correct, where they might get flustered and they're FOMOing on I should have took the trade. Why not getting the trade? This is annoying. I gotta move my no. Don't move your stop. That's one instance out of 2 or 3 that you might see. Go ahead, move your stop. Go get wicked out within the trend and go cry about that. That'll happen. So just let it be. So yeah. So now we got again this entry 1135. But yeah, Crip, that's a great point. Entry 1135. Your stop was 16 ticks away. Guess what? That's a 17 tick loss. Exit is 45.79.25. 45.79.25. First loss. $228 loss. Wow. Now I'm mad. Now we on tilt. No. Oh, it's a loss. It's next trade. Who cares? You up 1181. Most of us don't have $1,000 daily goal anyway. You would have been done by your first, second, third trade. This is trade number what, 12 or something? You know what I'm saying? Like it's 11:35. We should be doing our WordPress and getting ready for the Zoom meeting. Like what are we doing? It's a loss, cool. Who cares? It don't even matter. Okay. So now, go ahead and do this fixed. Guess what? I think we took this trade. Right. I'm not sure if we took this trade or not, but in any event, entry 45.79.50. 45.79.50. We know the stop is 31 ticks on the trend. We know that. Info here. We know the time was that 11:37. And again, we're taking all trades, no discretion. So within this trade, we had a go time. So guess what? We got to take that one too. And we know this is the stop. So that's 9 ticks on the stop, 45.85.25. 45.85.25. 9 ticks on the stop. Short. It's go time. See the time. I'm on this trade 11:57. What? Exits 45.87.50. 45.87.50. That's what? Oh, that's what? That's a couple losses in a row. Now we up only 660. That's half of our daily profit. Should we keep trading? Should we cry about it? No, we gonna keep doing Dojo. See what happens at the end of the day. Next trend trade is at 12:02. 12:02. We got a trend trade long. Entry price 45.87.50. 21 ticks on the stop. Guess what? 45.87.50. Stop here. Price is this, 12.27. At 12.7. $45.84.75. 84.75. How many ticks on the stop? That's 16 ticks on the stop. Actually, probably will be 17 to add one more tick just for that. This 45.84.75, we need 86.75, and we get it. So this is a price action winner that happens before the trend even finishes. So we'll take that check. Now we have another go time winner here. Up here, 10 ticks, 83.25. We need 85.25, and we get it. 83.25. 83.25. How much ticks on the stop? That's 10 ticks on the stop. We know it's a winner. What time was that trade? 12:50. And guess what? We know all trades don't just go to target. So now we got another go time entry. 10 ticks on this one. 80. This is basically the same price, the same trade, except this is at the time is 13:10. And y'all, if y'all didn't know, if y'all just type in 13:10, it'll actually convert it to the time that it needs to be. So y'all don't gotta even worry about that. Now, oh, what do you know? Look at that. So within the trend, you take the short, you take this long stop. Had you said, okay, golden ratio was, we know what golden ratio is. They broke through and they was holding it as support. Had someone with some discretion, more advanced trader, they could have moved this stop below here, not taking the trend trade. And guess what? This price action trade would have been a check. But guess what? We're doing no discretion. Most of us would have moved a stop underneath the golden ratio as support. They got to come get that stop. No losses. That's fine. We're not doing that. We're saying we're taking the losses and we're taking the next trade. So entry here, that's a target. Okay, now we're still in the trend trade. Guess what? Entry 45.8750. We need 5 points. We need 92. We need 92.50. Guess what? We get it. High today. It's a check. What do you know? We back up to 1200. We back up to 1200. Okay. That's cool. Now, one trade here. That's a stop. Entry 45.89. What's the stop on that? 18 ticks on the stop. ES long. $14.25 on the time. Still so much trading day left. Guess what? That's a stop. 45.8450. 45.8450. We also know that's going to be the entry price for the next trend. 31 ticks on the trend. And what was the time of that trade? The time of that trade on the trend would have been 14.37. 14.37. Okay, let's measure it out. Entry. Up here, what do we need for a target? Let's see. Again, we're not talking discretion now. We are not talking discretion. But from this entry, we already noted that golden ratio was support. What's happening here? It's not a surprise. Golden ratio support. If someone is in a trend trade, they might even take target a little bit earlier, but no discretion. We also know we have a go time karma entry here. That's 14 ticks on the stop. 14 ticks on the stop. What is the 40? That's the entry. 45, 84, 75. 45, 84, 75. And that time is at 1500. We know we get a target here. We know that. That's number at minus 2 points. We know we get that check. How about the target on this trend trade, 45, 79, 50. We know we get that. Equals this minus 5. Wow, 1300. Right back to where we were. So now we look at the day. This is 20 straight trades, 16 winners, 4 losses, 80% win rate. And this is with no discretion. For dojo work, for sure. Yep, for dojo work. But this is just showing the power of just doing the thing. Just we have a strategy, just do it. Another go time entry, 1532. Let's see, 1532 on the time. Go time entry. Yeah, short. Let's see what the this might be a loss. We like to see losses sometimes. 22 ticks on the stop. 22 ticks on the stop. 45.79 is the entry. 45.79. So what do we need for an 8-tick winner? We need 45.77. I really hope this is a loss so we can talk about more. Oh man. Other winner. Damn. We have an edge in the market. Oh, someone wants to let's look at this situation. Here's a situation. Somebody said to put your stop at the trend line. If you were in another trade, say you were in this trade and it didn't hit your target, or say you were in another trade, wherever it was, right? And you took your stop here. The market wicked through, but this bar never closed on the other side of the trend line. So this is why you put it 2 ticks above. It did it 2 times. It did it here. Here's a perfect examples. 1, 2.
So yeah,
where the market wicked through the trend line and the trend doesn't change. It did after the fact, but it did not change here. Go ahead, Crip.
yeah, that's what I was talking about as far as retesting. When you have basically relative equal highs, that's a prime example of that.
45, 82, 75. 45, 82, 75. That's 7 ticks on the stop. How much this trade at? This trade was at 15.49. Not sure who's still trading right there. The 350 guy. Oh, we know who's still trading at that time at the 350 guy. 82.75. We need 80.75 for a winner. We got it. Equals this minus 2. Man. What a day. What a day. I'm not sure if we're taking this trade or not. It's a minute left. Probably not taking that trade. But this dojo just goes to show that we have an edge in the market. We have an edge in the market. We really shouldn't be going against the script. We should be confident in our strategy. We should be confident with our tools. We came into the mentorship knowing that we wanted better for our lives. We want to make more money. We want to be able to help more people out. We have the tools to do it. We just gotta stick to the script. We gotta follow the plan. The reason why I do dojo is to solidify my confidence. Not that I need to do it anymore, but I think a lot of people, they may blow accounts or they may not have as much confidence in the strategy. I think if you go ahead and do some dojo work on what you're doing, it'll definitely help you get to where you need to be mentally. Because at the end of the day, we're all human. We all have fear when we're trading in the markets. This is money on the line, whether it's sim, whether it's eval, whether it's funded, whether it's real cash that you put in Ninja or whichever brokerage, it doesn't matter. There's going to be emotion when trading money. And if you understand your strategy and you follow your plan, you stick to the script, you have confidence in what you're doing, you take your losses, you take your wins. At the end of the day, at the end of the week, at the end of the month, at the end of the quarter, at the end of the year, you're going to be green and you're going to be good. So I think we all just need to follow a plan, and we all going to, continue to fund more accounts and have withdrawals and help our families and be able to have more freedom and spend time with family and help people out and do everything we need to do. So I think I was going to do dojo for the week, but I see that it's taking a little bit longer just because, there's this is education where there's a teaching component, which is nice, which I like that part. So I have shown how to do the dojo. Hopefully everyone else can use that to help them to build their confidence, because I know it has tremendously helped me. And just gotta stick to the plan, stick to the script, and do what we need to do. Crip, you got anything?
No, man, that was good. Just like you said, man, we gotta stay to the plan. First of all, make a plan. If you don't have a plan, you shouldn't be trading at all.
Facts.
So if you looking at this here, right? We taking all of those trades, but for me, if I'm going and going and going, and I'm over my goal, that first loss, I'm done for the day.
Exactly.
If I'm well over my goal and I'm in flow and I keep going, if I'm hitting targets after targets after targets, my first loss, I'm out.
Yep. And that's your plan. And
Yeah.
everyone should have their own plan. Everybody should have their plan. There are some traders who you might have $100 daily goal, $200 daily goal. You should be done after the first 3 trades. If your goal is 500, you might be done after. Let's look in this cumulative gain and loss column. Okay, After the first trade, you're up 96. After this, and these are all after commissions. After the first 4 trades, you're up $534. Platform off. That's it. Go enjoy your day. You're up $534 at 9:45. What do you go outside? Go work out. Go do yoga. Go in the gym. Go be with your kids. Go give back to the community. Go something.
Or if you feel like you still need to trade, if you want to just be a market participant, go and sim.
That too.
You know, because there are times where you have to control your emotions. You are going to have emotions where it's going to tell you like, man, you missing all this money. You missing all this money. You can't just, well, most people can't just easily get rid of that. You know, then that's the greed factor.
Exactly.
So if you feel like you want to trade some more to get, to get your screen time in, to get your dojo work in, and whatever, go in the sim. A live simulated environment is just like you trading another account, but I mean, you trading your real account, but you're preserving capital. That's another important thing is capital reservation. Once you get it, you got to hold on to it. Just like when you get into a trade and your trail kick in, you're preserving capital. So, yeah, man. I mean, this was a great video. Like I say, we're going to be coming with more educational videos to show you guys how we trade. Show you some of the tools that we use, some of the strategies that we have, some of the funding partners that we use. And yeah, stay tuned. Like, subscribe, notification bell, leave a comment.
Yep.
Appreciate it.
Yep. Like, share, subscribe, hit that notification bell. And as Crip said, more videos coming in the future. We're going to be doing a lot more actual live trading our accounts on the channel. We're going to be doing more dojo work, more educational videos, content. Podcasts also coming soon, potentially. And yeah, that's it for me, man. Hope everybody has a blessed day, blessed night. Be with your family. Yeah, it's a wrap for me.
All right. Get with you guys later, man. Hey, stay connected, man. Future Connect. Let's go.
Peace.